traders, and welcome back to Smart Money Insight. My name is Rein, and today we would like to talk about stock for what has been happening this week. You know, it's pretty crazy ones, pretty a bumpy market this week, and this is happened because of current ongoing risk, and also there is a new upcoming risk that you definitely need to know in order for you to manage your portfolio better. And at the same time, I would like to talk about two trading opportunities right now that, well, pretty interesting ones. The first one, I'm going to be talking about Google. We're talking about Alphabet. And for those of you who have been following about this stock last month, since about December 2024, I would say the stock has been in the consolidation state. And recently, just recently, I think it's facing the end of the tunnel. Means that I'm seeing a potential rally or breakout coming from these stocks, and I'm seeing a potential return about 10 to 15%. So it's kind of like a double-digit return. So for those of you who has been following this stock for quite some times, well, you probably would like to analyze or follow up with our analysis and whether or not to decide to add into your stock portfolio or not. And second to that is going to be Vertex. Well, the interesting about Vertex was that there was a corrections last month, and there's a rebound as well, and we see a continuous rally, a continuous momentum from the stock. So it's kind of good if we can ride the opportunity together with the stock to profit further. So I'm talking about potential 5 to 10% coming from Vertex. Now, before we talk a little bit more about the market, so for those of you kind of new, you haven't subscribed this channel, so probably you like to give a thumbs up, you like to subscribe and ring the notifications so you will not miss out any good opportunities coming from the stock markets. Well, let's take a look on the market. Despite of the bumpy week or months, but the January market still performing well. As you can see that the market ends January higher. However, that there are a couple of variables that as investors you want to monitor it closely, and they are, well, the first one, tariffs. Second, we're talking about interest rate, and third one, we are talking about the China newly developed AI. And why this is so important? Because apparently this variable threatens the existence of the Silicon Valley. A lot of investors, especially investing heavily on the tech sector, on AI specific, they started to think whether or not they're investing into something that is overvalued. Now let's take a look the market on the Friday close. Well, Friday is supposed to be a good day, good performing market day because there was a good corporate earning reports together with a good economic data on personal spending. But suddenly there is an announcement coming from the White House that they would like to impose a tariff to their trading partners like Canada, Mexico, about like 25%, as well as 10% to China. And definitely that this announcement gonna be scare off the investors, thinking that this announcement or tariff potentially will cause the inflation rate to stay high. And as a result, the index on Friday would drop. So for example, if you're talking about Nasdaq, now take a look over here. It started positive, it went high to 1.5%, but it ended negative 0.3%. And for the S&P 500, it went into negative 0.5%, and Dow Jones dropped to negative 0.8%. But again, as I mentioned that in January, the market went higher. So talking about Dow Jones, it gained 4.7%, and for the S&P 500, it went up 2.7%, and Nasdaq rose 1.6%. Well, this chart showing kind of like other index that worth of your attention. So for example, like stocks Europe 600. Apparently in January, the index climbed about 6.3%, and this end at record high. And apparently that this single month performance is better than the whole 2024. Now, talking about the London FTSE 100 and Germany DAX also closed at records. So, I mean, FTSE London performed 6.1% and the DAX performed 9.2% respectively. All right. Now, another important one, talking about the gold performing well, about 7%. And for your information, talking about the gold, a lot of investors right now thinking, well, in 2025, interest rate might be, they think interest rate going to be lower. And with the lower rate, it means a lower cost to hold the gold. So the price, they might predict that the price will maintain or the price will rally out further from $2,812 as it ended on Friday. And another thing that you probably would like to consider as well, because of geopolitical uncertainty, the heightened conflicts is coming from wars in the Middle East, Ukraine, and also there's a trade dispute with China and other countries. So potentially gold is something that a lot of investors are looking at as safe haven. Now, what is interesting and important about the rate is that, well, as you know, the Trump administrations, they are trying so hard to push the rates down, even putting a demand for the Fed to lower the rate. However, with the new imposing tariff to their trading partners, this is giving a new concerns that the inflation may tick higher, which derailing the possibility of further interest rate cut by the Fed. And therefore, this Federal Reserve right now is kind of playing wait and see game to see how the economy performs before they start to cut the interest rate again. And this definitely caused the yield to rise. Well, as the current investors, I would say they might expect that the new bonds will pay with the higher rates. Therefore, the current investors, they will sell off their bonds, causing the price to fall. And this is definitely caused the yield to rise. Well, another important and the third variable here is talking about the AI. Well, this threatened directly to NVIDIA. Therefore, if you heard last week, a lot of NVIDIA investors, they were in the panic zone. So the threat comes from this China upstart DeepSeek, which has successfully trained a sophisticated AI model which is compatible to their rival like OpenAI in a far more efficient manner. So they can giving the same performance with the cheaper processor. So that's giving a big question for investors, like why I would like to invest into billions of dollars like NVIDIA, which is giving the same performance or achievable by a cheaper investments, giving sample like DeepSeek. Therefore, this is going to be giving them as investor big concerns whether or not they have been investing into something that is potentially really overvalued here. And therefore, NVIDIA share lost about 11%, or it's about $348.2 billion in January. And because that this is one of the market largest stocks, this pull down the S&P 500 performance, especially in the IT sectors. And this concern also lead to another concern that would be ever happen again, like the dot-com bubble in this 2025. And for those investors having this kind of concerns or issues, I would say that there are a couple of arguments in the markets. They would say that, well, if you have take a closer look, even in the same segments, like in the IT segments, like Meta Platform, which is another AI player here, it gains about 18% during the months, or about $268.3 billion. So this is probably more into a company specific. And also that if you take a closer look into sectors or industrial performance, well, in general, well, I would say they held up the performance very well. So this is giving a strong or a bullish sentiment in the stock market right now. And another arguments in the market, I would say, well, it's justified with the strong corporate earnings. Means that given with the strong corporate earnings that will justify your whatever high prices that have rallied for the last 2 years. So that simply means with the strong fundamentals, strong corporate earnings, so the stock right now is not expensive, and there's no thing such expensive given that it's giving you a good returns. So that's probably some of arguments that giving support in the markets from seeing the dot-com bubble to happens. However, that I would say as investors, always that you want to follow up closely with the company's fundamental, you want to analyze the current market sentiments, you want to see the Trump policies, and also probably you like to look at macroeconomic factors as well that altogether shape the equity market here. So I think that's pretty much for the markets. And right now, we would like to see these two trading opportunities given the current sentiments, given the current market situations that are still potentially giving us a very good returns. And first, now let's take a look at Google Alphabet.
Now we shall study Alphabet Incorporated. Google, which is the parent company of Google and various other businesses in sectors like advertising, cloud computing, hardware, and autonomous vehicles. Now let's look at its price chart. In the last 9-month period, the stock hit a low of less than 150 in early September 2024. And from that moment onward, the stock keep moving up with higher high and higher low. At present, the stock is in a strong bullish trend with the SMA 20 higher than the SMA 50, and the latter is higher than the SMA 200. The percentile rank data shows that the stock's current price is at its highest in the context of the last 200 days and the last 50 days. Now let's dive into the option market to gauge at the current fear and greed surrounding this stock. So let's look at this scatter and bar chart. The x-axis represents the strike price, and the y-axis represents the implied volatility of the put and call options. The put options are represented by the blue dots, while the red dots represent the call options. The implied volatility, IV, of call options seems to indicate a greater degree of optimism or greed, as it is elevated compared to the implied volatility of put options, reflecting a relatively lower level of fear or caution in the market, especially at the strikes prices, which are immediately adjacent to the current price. ATM. The volume of put options is generally lower than that of call options. This indicates that traders tend to favor betting on price increases by purchasing calls, rather than hedging against a potential decline by buying puts for protection. The option activity suggests a price resistance level around 205, which, given the current market sentiment, appears achievable, as evidenced by the significant volume of call options at strike prices between 205 and 225. Let's draw the resistance line at the price chart. I would put that the option market is giving this stock a current bullish index of 0.803, where 0 is for total bearishness, while 1 is for total bullishness. However, I can't stress enough that the above analysis only reflects the evaluation done at the close of the January 31st market. And like of wise men always say, all ship rise and fall with the tide. Vertex Pharmaceuticals Incorporated, VRTX, is a global biotechnology company primarily focused on developing and commercializing therapies for serious diseases, including cystic fibrosis, CF. Now, let's look at its price chart. The stock experienced strong growth in mid-2024, driven by positive developments in its pipeline or business. It reached a peak above $500 before experiencing significant drops in price, particularly in the late 2024 to early 2025 period. As of early 2025, the stock appears to be recovering slightly, although it is still below its recent highs. The percentile rank data shows that the stock's current price is relatively low in the context of the last 200 days at 36.5%, but performing better within the last 50 days at 70%. This suggests that Vertex's stock had a period of high growth followed by significant price corrections, with current performance showing some recovery. Now let's dive into the option market to gauge at the current fear and greed surrounding this stock. So let's look at this scatter and bar chart. The x-axis represents the strike price, and the y-axis represents the implied volatility of the put and call options. The put options are represented by the blue dots, while the red dots represent the call options. The implied volatility, IV, of the call options appears to reflect a stronger sense of optimism or greed, as it is higher than the implied volatility observed in the put options, which suggests a more subdued level of fear or caution in the market. The volume of put options are averagely lower than the volume of the call options. This suggests that traders are more inclined to place their bets on price appreciation, favoring calls rather than on hedging against a potential decline, as evidenced by their preference for buying protection through puts. The option interest shows that there is a price resistance in the region of 485 and 490, which at the current sentiment level seems to be surmountable as indicated by the high volume at 500. Let's draw the resistance line at the price chart. I would put that the option market is giving this stock a current bullish index of 0.843, where 0 is for total bearishness, while 1 is for total bullishness. However, I can't stress enough that the above analysis only reflects the evaluation done at the close of the January 31st market. So that is all the analysis for today. See you in the next one, and trade smart.